What's up everyone, it's Scotty with Money Investing. So the market's here just mostly trading sideways, and the Nasdaq was slightly higher on the back of just a handful, literally a handful of stocks in the entire market overall, pulling back a little bit. The Dow Jones selling off on the back of these bank fears, and the S&P 500 also lower. And we've got lots to unpack here, from Elon Musk's announcement to what tech sector and tech companies are doing overall with PPI numbers and jobless claims. So we got lots to talk in this market update. So make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining. And there is a 16% annual discount available till the end of this month. And you can access all the alerts, all the advantages and the benefits and the trading view charts. And of course, not to mention the private live streams as well. So link's going to be down below. So this right here is going to be the market. So S&P 500 here lower, down about 17 basis points, trading up as much as 41.30. We've got the Nasdaq up over 18 basis points on the back of literally just a handful of companies, which we'll talk about later in the video. The Dow Jones dropping over 200 points here on the day, or coming down a little bit over 66 basis points. Once again, trading down to 33,300, and all on the back of banking sector, banking stocks, because they were once again coming into the highlight here, coming into focus, because PacWest reported that they did have about a 9.5% decline in deposits. So Jamie Dimon also mentioned a little bit about the U.S. default, and that is a separate issue, which I've already talked about in a dedicated video. So make sure that you do check that out if you haven't already. But the Dow closes more than 200 points lower for the fourth straight day of losses, dragged down by Disney as well. And by the way, Disney did report numbers. They were down a little bit over 8%, and the subscribers were going down, which is a big concern. I will be doing a video on Disney separately. My fair value right now still sits closer to $80, but we'll talk about that in more detail in one of my other videos. So tech's new business model is, quote, do more with less. So many tech companies are focused on efficiency and cost cuts and doing more with less employees. So that's really been the theme. And you'll notice that after Apple's earnings report, since then, most mega cap companies, a theme that investors heard from top execs at Silicon Valley beyond was it's time to do more with less. And we also shared a meme from Sundar Pichai yesterday. The theme isn't just to do more with less. The theme is also to do more with AI. And that's really where the momentum's really been coming from for NVIDIA, for Microsoft, for Meta, for Google. Even Google today, had one of the best days it's had in such a long time. It was up a little bit over 4%. And this week, Google is up over 10%. So I shared a little bit of a meme of Sundar Pichai literally just talking about AI, generative AI. And there's a one sentence clip together which says it uses AI to bring AI, and then that's it. He just walks off. And that's like a summary of what Google, pretty much mentioned in their keynote. It was like AI across the board for so many different times, so many different occasions. And that's one of the reasons why the stock is obviously responding the way it is. So it's not only a theme to do more with less in terms of being cost efficient and being conscious about your spending, and of course laying people off, and that job cuts are part of it, but also doing more with AI. And those are the two themes when you combine together is what we're seeing this momentum carry forward the entire market with it, because of course the tech stocks are pushing higher. So Jamie Dimon also warning panic will overtake markets as U.S. approaches the debt default. JP Morgan CEO Jamie Dimon said Thursday that markets will be gripped by panic as the U.S. approaches a possible default on its sovereign debt. An actual default would potentially be catastrophic for the country. And Dimon said he expects that worst case scenario will be avoided. However, because lawmakers will be forced to respond to growing concern. And I did a video about this earlier today. So, for me, in my opinion, it's a little bit more of a political theater. But as we go back and forth with this U.S. debt ceiling debate, I think it's gonna be very, very consequential, because there's going to be some collateral damage. There is going to be collateral damage, because as we get closer to that date, even though a resolution comes in, it matters when that resolution comes in. If it's towards the last hour of the last day, obviously it's gonna create some volatility in the market, and the probabilities of a default are going to increase, and thereby the sovereign debt or the credit rating is going to be re-rated by these rating agencies. So that is something that we need to pay attention to. We know the answer to the question. We know the debt is going to get raised or suspended. The ceiling is going to get raised or suspended. But how we get there is still a question mark, because there's going to be a lot of back and forth and there's going to be a lot of debate on this. So jobless claims coming in at 264,000. So we're seeing a bit of an increase, a 20,000 increase compared to the consensus and the prior numbers. So labor market definitely seems to be easing up a little bit. And PPI numbers were very, very good. So we're seeing only a 0.2% increase in month-over-month PPI. Year over year, we're now sitting at 2.3%. And core PPI is sitting at 3.2. I'm assuming that's on the back of shelter, and that's really been the key driver for core inflation, even though headlines been coming down on the back of energy and food. But shelter really is what's keeping core inflation still elevated. And some of the other metrics, again, 0.2% higher, and year over year, we're sitting at 2 to 3%. So we are now already, in my opinion, down to where the Fed wants inflation to be. Obviously, we're not going to be exactly at 2%. We can't be that rigid, right? That's why in my fair value analysis, I've put down a flexibility range, plus minus 5%, where I'm comfortable buying that stock or whatever stock is in question, plus or minus 5%, because we can't be too rigid, because in finance, in investing, in trading, markets are chaotic. Nothing works at 100% certainty, right? If you have a number in your mind, it's not going to work exactly at that number. You have to have some flexibility. And I think with the Federal Reserve's 2% target, they understand that. Like, they're not targeting 2% specifically, but that's their placeholder. They want to get down as close to that level as possible. And with PPI year over year sitting at 2.3% is one of the biggest indicators that inflation is indeed slowing down and easing at the moment. So Meta unveils AI testing playground to help advertisers build campaigns. So this is a new announcement on Thursday that they are announcing several new tools and services powered by AI to help advertisers efficiently build ads and improve campaign results. At an event in New York, Meta unveiled AI Sandbox, which it will call, quote, testing playground for advertisers to use as they try out new generative AI-powered ad tools. Elon Musk also announcing that he is stepping down as Twitter CEO, and for that very reason, Tesla stock towards the last hour of the day was up pretty substantially, ended up closing up a little bit over 2%. And Musk said that via Twitter that the new CEO, unnamed woman, would start in about 6 weeks. And several Tesla investors were concerned that Musk was obviously too distracted, spending way too much time on Twitter. And now I think that's going to be fixed as the new CEO comes on board. And for those reasons, Tesla stock was higher on the day. So this is what the market looked like today. We had only Google up 4%, Meta, Amazon, and Tesla. And Netflix also breaking out further and pushing higher on the back of Disney earnings. So Disney here dropping 8%, Netflix benefiting from Disney's earnings. And again, we're seeing a very, very handful of stocks. And PayPal, surprisingly, it was a miracle, up over 1%. But the point is that we're seeing a very concentrated market right now. We're only seeing a few, literally a handful of companies move higher. Everything else is down. Microsoft down, Nvidia down, AMD flat. Financials, energy, materials, utilities, industrial, healthcare, everything selling off. Defenses actually did a little bit better today. So Coca-Cola, Walmart, Costco, they're slightly higher, 40, 50 basis points. But this right here kind of reminds me of that meme of that drowning kid and that lady who's like supposedly happy and having fun with her kid, and the other kid is just drowning in the background. So this right here is the meme where the lady is the investors. This kid right here is the technology stocks, which are being celebrated by all investors, and the entire market obviously just drowning on the lack of breath in the markets, because other sectors are completely being ignored right now, and we're just seeing a handful of companies move higher, which is Google and Meta and Tesla, Amazon. Alibaba actually did really well today, up over 6%. But the bottom line is this is not a broad-based rally. This is not a broad-based move in the market, so to speak. So again, comm services up, consumer cyclicals up, everything's selling off in the last 1 week. Comm services up, consumer cyclicals up, technology, financial, energy pushing higher. And in the last 1 month, once again, basic materials down, energy is down, utilities down, financials down, real estate's down, and even industrials down. Only 3 sectors up: comm services, cyclical, and tech. This right here is going to be futures. So wheat and palladium prices, cotton prices pushing higher, with orange juice slightly higher, with everything else down from platinum to cocoa to lumber to silver. Everything selling off, along with coffee and sugar prices. Bitcoin's back under 27,000 because of some crackdowns, and Ethereum here also trading back under $1,800. So going over to oil prices, we're starting to see a little bit of a pullback from that resistance, from that rejection rally, and that's sitting at around $73, $74 per barrel. So we're starting to see that pullback once again. Bitcoin now starts to break below this support at around 27,000. Next support is going to be at roughly around 25K, and a resistance all the way up to $30,000, as we have already talked about on the channel before. For Ethereum, we're going to be watching that resistance at 2100, I believe. So 2137 is going to be that resistance. Support level is going to stay put at 1700, and we're still within the context of that range for Ethereum for now. Talking about the yields, and we're seeing a little bit of that divergence, right? Because long duration bonds are now perceived as, I guess we're not really having any perception of the long duration bonds, but the short duration bonds are moving higher because of this default debate that's kind of lingering on for some time. So you're seeing that divergence, right? You're seeing this big gap here that's been left, and that's because short duration bonds are moving up, and long duration bonds, which is the 10, the 20, the 30, even the 5 and the 7, are either not moving anywhere or they're slightly moving lower. So you can see that since March, what we have really seen is these sets of bonds, the short duration move up, and then the long duration bonds either move down or really trade sideways. So this right here is the gap that's been left between these sets of treasury yields. And it's very clear because, again, it's now going to start to be perceived a little bit more risky if the debt default continues, or if the debate continues and the U.S. gets very close to defaulting on its debt. It's obviously going to be a much bigger problem, much bigger than the market. We're gonna have bigger things to worry about. Let's just put it that way. Now going back over to the market. So our SP, which is your equal weighted index, was down about 50 basis points. So again, very telling sign that this is not a broad-based rally, but instead only controlled by just a handful of companies. And going over to the NASDAQ composite, we are seeing a little bit of momentum back up, again, on the back of just a few names. And on the day, it was back over 12,300. So again, that momentum and that potential rally continues. Well, not really a rally, but that slow and steady move to the upside continues. And that resistance is going to be at 13,000. S&P 500 still nowhere near close to its resistance of 4182 or 4200. We're still going sideways. We're still struggling. So really, I mean, 2023 has been a year of tech. That's really what's moving higher. You can see that in this chart. If I go over to year to date, you'll notice that Bitcoin, Ethereum are coming down, but one of the best performing sectors is in fact technology. And if you take a look at QQQ, up 23% on the year, and XLK, which is your technology sector, up 22%, and XLC, which is your comm services, up over 22%, and XLY, which is your discretionary, up over 16%. So those three sectors combined pretty much make up most of big tech, as we know, and they're the ones that are actually leading the market. Everything else is straight up flat or down on the year. So this has very much been a tech-driven year so far. And Tom Lee's even suggesting that we're going to see another rally and close to 50% gains for FANG stocks, including NVIDIA, AMD, some of those companies as well. So absolutely mind-boggling. If that happens, hey, great. I'm not complaining, but it's definitely going to be, questions are going to be asked about valuation, about market breadth, about concentration. Eventually, those are going to be some more meaningful questions to us. But nonetheless, S&P 500 still struggling at that resistance at 4,200. NASDAQ already starting to break past that resistance and on its way potentially to 13K. And RSP telling us a little bit more insight, or giving us more insights into where we are with this market breadth. And we're nowhere near close to that resistance as we have seen from back in December. Now going over to the stocks here, starting with Apple. Once again pushing higher. This week it's up about 10 basis points, so more or less flat. It really is starting to lose a little bit of steam. So in the last couple of weeks, we have seen very nice rallies. Last week, it was up 2.2%. The week before that, it was up 2.8%. So we're seeing a little bit of a not really a pullback, but the steam, the momentum starting to slow down a little bit. And resistance is going to be a 177. So this right here is going to be that level to watch. And Apple, of course, getting up to very, very overbought levels. And every time it has gotten up to these levels, we have seen a bit of a pullback. And it's quite interesting because I've actually been doing these videos, market update videos, for over 2 years. Not missed a single day. If you go back and watch market updates, the channel and the actual playlist, I have not missed a single day for these market updates. And I've been talking about this for over 2 years. It's crazy how, because when I look at the sentiment, which is the data that I collect, and that is through comments, right? So I'm analyzing that data, the comments, the feedback, and just the sentiment. It's crazy how every time I remember going back to these times and when we talked about how these stocks are overbought and technically there is a potential for a pullback, there's always sentiment that no, it's going back up to all-time highs. This is it. I mean, we're going higher. And more often than not, when you see the technicals become overbought, like the RSI is over here at over 75, that is an unsustainable move to the SI. Like you cannot have a stock keep moving higher despite the technicals saying otherwise. Despite the stock being really overbought, you just cannot have that stock keep moving up forever. Same thing with Apple. The fact that it's moved up since January of this year, it's up 40%. I have a very strong confidence level that it's not going to keep this up forever. At some point, we're going to hit that resistance and we're going to pull back. It's just, that's the nature of the market. You will never find a company go straight up all the time. But a more realistic way of going up is going up and then coming down, going up and then coming down, going up and then coming down. We're still making progress, but obviously it's through volatility and through pullbacks. So I think I've made myself very clear for Apple as well. I think we're getting overbought here. Resistance 177. And I don't see how Apple can keep this up indefinitely. At some point, we're going to see a pullback. Now, when that point will come, that's a little bit more difficult to pinpoint because, again, nobody can time the market. But the probability, that's what we're here to discuss. The risk-reward probability is not great going long on Apple at these prices. That's the bottom line. Talking about Amazon, and Amazon here on the day, up another 1.8%. So this week it's up over 6%, once again approaching up to its resistance. And this right here is going to be that level to watch at close to $114, $115 per share. And right now we're getting up to that level once again for Amazon. So that's going to be that level to watch all the way up to that next resistance at 144. But we don't have to worry about that just yet because we're too far away from that resistance. But that is going to be that next target and that next resistance to watch for Amazon. Talking about Tesla, and Tesla here on the day up a little bit over 2%, so a very nice move for the week. We are still inside this red rectangle, so we're mostly just consolidating sideways right now. And inside this red rectangle, resistance is going to be at 175 with a support at 166 for Tesla at the moment. So right now we're just consolidating sideways and literally inside this red rectangle. Talking about NVIDIA, and NVIDIA is starting to look a little weak, and again the RSI is extremely overbought at 74, and so is the MACD, and I think it's going to be game time when they report their earnings. I think it's next week or might be the week after, but once they report their numbers, it's going to be showtime. They're going to have to really tell investors why they're paying over $705 billion for this company. So it's going to be make it or break it type deal for NVIDIA. And of course, right now we're just consolidating sideways. So if you do get a breakout, next resistance is going to be at 347 for this company. So that's going to be that next target. And of course, support level down to as low as 261. That's going to be a more near-term support level right here. And of course, all the way down to low 200s for NVIDIA moving forward. Talking about advanced micro devices, and AMD also getting a little bit of a consolidation. So we're not really seeing a lot of momentum, but instead just trading sideways. Resistance is going to stay put at roughly around $102, $103, with the support, near-term support sitting roughly at $80 for advanced micro devices. Talking about PayPal, and PayPal with some miracle was up. Buyers did step in. They were a little bit more optimistic on PayPal today, so up over 1.2%. But again, this is going to be that resistance because we did break down below this level. So this right here is going to be that resistance level to watch at roughly $66, $67 per share for PayPal, and of course all the way up to as much as $77, $78 to as much as this right here, the lower high at $77, $78 for PayPal. Talking about Square, and Square here also green candle on a red day, so seeing some buyers stepping in. Support level is going to stay put roughly at $53, $54. So this right here is going to be that level to watch for Square, a very strong area of support for this company. Talking about Meta platforms, and Meta here pushing higher, up over 1% on the back of their AI initiatives. And resistance, again, is going to be 236, 237. So we're once again getting rejected at these levels for Meta. So this right here is going to be that resistance to watch, and support level is going to stay but roughly at $229, $230 for this company. Netflix, the big beneficiary on the back of Disney's, is starting to see a breakout from the symmetrical triangle. And resistance right now we're getting up to is going to be $348. So this right here is going to be that level to watch for Netflix, with the support staying put at roughly 275, 276 for the company in the near term. But resistance 348 all the way up to as much as 380 for this company. Google, on the back of AI, a very nice move, 4%. It was much higher. It was up like 5 or 6% at one point, but next resistance and target is going to be 123, and I think it's time for Google to actually shine on the back of this AI hype, because it has definitely been under the radar. I mean, it's the difference between Microsoft and Google has only widened in terms of the market cap, and resistance next is going to stay put at $123 per share. Support level now is going to be $109. Very strong breakouts for Google happening at the moment. Talking about Microsoft, and Microsoft also struggling at that resistance at 310, 312, something that we have talked about on the channel before. Both Nvidia and Microsoft are starting to lose steam a little bit, and we're seeing other parts of the market which were not really loved at one point, Amazon and Google. They're the ones that are actually moving higher. So we're seeing a bit of a rotation out of Microsoft, Apple. We're seeing a rotation within tech. That's what's happening at the moment, in my opinion, which is quite interesting. And then finally, we got Shopify, which was on the day down a little bit over 40 basis points. So again, it has been extremely overbought. It has been pushing high over the last few days. So right now, support level is going to stay put at 54 with a resistance at $75 per share for Shopify. So I hope you guys enjoyed this video and a complete update on the markets. Let me know your thoughts down in the comment section below. As always, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining us. And of course, getting access to all the buy and sell alerts, options alerts, trade ideas, and the private live streams and all the other private benefits, including trading view charts, our text channels, and my analysis as well. As always, happy investing. I'll see you all in the next video.